Hi everyone. I thought I would do a quick concepts video on arrayed trends and trend scalping. Um, so arrayed trends are basically where you start, I should say time arrayed trends, where you start with a higher time frame and then you work them down through time. So you're always trying to make sure that the time frames you're working through are divisible. It's usually good to sort of work on a 1 to 4 sort of scale. So start on say a 4 day and then work your way down to a 1 day, and then something at least that's fits 4 times into 1 day would be your next step. So let's start here. We've got a 4 day chart. We start with our low, come up here, and the first candle that has a body completely clear of the trend is this one. So we'll come up to this. This one is touching, so we're going to ignore that one. This one's completely clear of the trend, so we're going to come down to this one. Okay, and because we've got all these candles sort of going up and down through the trend here, we're just going to stop here. So we could come down to here and we could make an interior, but we won't do that. We'll just stop here. Then we'll go down to the 1 day, because what we're looking for is basically somewhere where we can take a trade on a daily or lower time frame. So same sort of rules. We now move to the one where the body is completely clear of the trend. We never ever move the start point, never touch this, but we touch this. Okay, so set this, put there, and then of course this one's on the line, so we ignore it. This one's below the line, full body below the line. The wick can touch, but the body can't. Under there. Now, the difference between just running a trend between the lowest wick and this wick is that this wasn't actually the trend. This was a liquidity grab of the trend. So the trend is what you see running through there. That was a liquidity grab. If you were trying to take a trade on the trend, and you worked off this line over here somewhere, you would have actually already lost your trend, and you'd be trying to take a bounce on something that's in free fall. So that's why it's quite important to work trends this way. They identify the difference between liquidity sweeps or liquidity grabs and the actual trend. So we can now start with this one for an interior over here. And same rules, we're looking for bodies that are clear. So that one. And then we get left with this little doji over here. And dojis are not the nicest thing because they are an indecision candle. It's not always a great idea to snap a trend to it, but the other option would be snapping it to this one. So we sort of see let's just see how it looks. Like if we go over there, well, they're pretty much the same. So we'll leave that roughly there. And you can see that when the daily candle came down here and hit that daily trend in the future, because we're looking to take a trade off a trend or a scalp off a trend, right? So we've established back here that this is our trend. The price goes up, and then it actually more or less bounced off it there as well. But so we could have taken this, and we could have taken this as two little scalps on the daily, just for daily entries. So now that we're down below the daily trend, we should probably look and see what we can do with a 4 hour. So the charts can start to get a little bit small and things can start to get a little bit spread out, but we'll have a look at the 4 hour. And same rule applies. Here's our pivot. Okay. Just note too that that did hit the daily trend on a lower time frame. So, and that swept the trend for liquidity. So it's always good if you're trading like on a daily trend line to look at it from the 4 hour or the 1 hour or something smaller, because it may not look like it touched on the higher time frame, but when you actually look at it on the lower time frame, you can see you got your entry and you had your run up. So our pivot point is there, and the first candle that is completely body below the line is this one. So let's have a look at our 4 hour trend. So we're going to take this and we're going to shift it all the way forward to that candle. And as you can see, the first touch got a bounce. Now it's not a huge bounce. It swept the liquidity here, came down to about 166, went up to a high of about 170, but still, for a scalp, it's a $4 move, etc. And if we have a look at that on a lower time frame, what you can see is trend was here, you entered here, and you TP roughly at this high. So just that little scalp in there. Now, of course, we have another candle on a 1 hour that we can move it forward to after that, which is there. And the next candle after the 1 hour activated off the trend and went up to the top there. So that was just another trade off the trend you could take. As long as you're actually following the correct trend, you can take it on the trend, TP at the high, either the break or the hold level, depending on what's available on the chart. So that's now our 1 hour. And you can continue to do this, say 1 hour, you can fit 15 into that. So let's have a look. Where's our first candle? It's this big candle here. So our trend moves to there. And as you can see, it activated on the trend and it went up and it hit the hold level. So because of the size of that candle, actually, that's not such a bad move. So, 164 up to 168. So as you can imagine, you can keep doing this. So you can go down, you can do a 5, you can do a 1. But I guess what I wanted to show you is how you can actually array trends through time and take scalp entries on them and trade all these little bounces you get as prices moving around on the charts. Hopefully you get something out of that. Tell me in the comments if it blows your mind how that works, but it's a pretty simple, easy way to make a living, and I think most people can grasp exactly how to do it. All right, have a great day. Smash like, subscribe, all that kind of stuff if you're not already. Tell 50,000 of your friends. We want to try and get these numbers up, and we'll keep bringing you some cool stuff how to trade. Cheers.